Hi guys, it's Wednesday the 18th of December 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into it. Hi guys, it's Zenny, aka the Noctrader, your friendly neighbor swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check that description section below, you'll see a link to my mailing list. I've got a Discord group as well called Pip Talks. It's a chat room for like-minded traders and investors to discuss everything and anything to do with trading and investing. And I've got an ebook out. This ebook's all about what trading platform to choose from. So I'm going to go through a couple of stocks that I'm looking at right now. I'll hit you with the purple ones first. The first one, let me hit you with the ones I'm in at the moment. So the ones I'm in at the moment, I'm in GROUPON. Let me highlight that purple. So I'm in GROUPON. It's going so far so good. I'm up to 10. I told you I shorted GROUPON. So what I saw in that was on the daily chart, well, it can go as high as a weekly chart. On the weekly chart, it was a falling wedge. So price kept coming up to this line and then falling. So I thought, okay, there's a potential for it to do that again. So when it got to this resistance line, I waited for it to sell off a little bit, and then I took a short position. But that wasn't all the information that I used. If you go down to the 4-hour chart, you can see that this is kind of like a descending triangle. So what that means is that you're making horizontal, like there was a resistance line here at about 302, and then there was a support line here, and it was making higher lows on the support line. So it was like a triangle forming. So when it got to this point, it sold off. Now the reason of this dramatic sell-off here was because yesterday, before the market opened, Goldman Sachs announced that they were going to Goldman Sachs analysts announced that they were going to change their review of a GROUPON, and it was going from a hold to a sell. Now this is pivotal because a lot of traders actually go off of analyst reports. I don't really go off analyst reports. I made a video about that if you want to know why I don't really listen to analyst reports. But in terms of short-term plays, it can affect the share price of a stock, because especially if it goes from a hold to a sell, because that's probably the most important one. Because if it goes from a hold to a sell, that means that there's really bad what do you call it? There's some bad news around the corner about this company. And what I found was that they were having a high churn rate in GROUPON. They weren't able to keep customers, so that's why it's been selling off so much. So what I'm doing is that I'm hoping that price will continue selling off into this green profit zone, at which point I'll take my profits. So I'll take my profits here. So I'm still hoping it can get to about 210, 208, and then I'll see how it goes. But right now, I'm just waiting for it to continue selling off. It's doing a little bit of consolidation today. I don't expect it to sell off much today. I actually expect it to retrace some more, because it made the lowest of 260 at some point, or 260 pounds, but now it's down to 210. But I expect today, maybe tomorrow, to retrace up, and then it'll continue selling down for the next couple of days. But I'll give it maybe another 4 to 5 days to see how it plays out. I've also taken a position in SES. So SES is Secure Energy Services. Now the funny thing about this is that this was one of the stocks that I actually saw on my Noctrader's bearish screener, and this is how it came to my attention. So on my screener, I found that on the daily chart here, this was a previous support here. So you can see this green arrow here and this green arrow here. So price came back up and then sold off, and it broke the previous support. I remember the bear screen is all about finding stocks that are going to break previous supports and then sell off frantically, and that's kind of what it did here. It made about 30% in 20 days, so that's a good return if you had actually shorted that, but I didn't. Now, but when it got to this about 411 point, it found like a support, and then it looked like it was starting to make higher highs. It did exactly what I look for in stocks when I'm trying to see a reversal. It broke above the 15-day exponential moving average, consolidated, and then started climbing some more. So what I did was that I went down to the 4-hour chart, and I went, okay, I plotted this line here at 472, and it was almost like a little bit of like it was a previous kind of like resistance, because it hit it once, hit it twice. This time it broke through it, came back, consolidated, and then started climbing. So that was a good sign to me that, okay, it looks like it's making a bullish move. Also, it looks to me that there's low volume in this area. As you can see here, let me highlight this area. This area, it seems to be, there seems to be a lot of low volume. You can see that because previously, as when price fell, it fell really frantically in a short space of time. So 7 days, 100 pips. So I wouldn't be surprised if it took another 7 days to go about 100 pips. So I wouldn't be surprised, because previously this area didn't have much volume. That's why it was able to tank so fast. So I expect it to climb in a similar fashion. Obviously, it may not go that quickly because we're heading into the Christmas period and volume is normally low then as people exit out their positions or stop trading. So I expect it to go up, maybe not in the same pace it did here, but we'll see as of when it starts breaking out up a little bit more. Right now I'm in -8 but I'm hoping it can get to about at least 600. I'd be happy with 600, but if it's lower than that, then we'll see. Another one I'm looking at right now is Dollar Tree. Now this is a big example of confluence. This one's a great one. So on the weekly chart, you can see that it's been making high highs since the IPO. It's just been climbing and climbing. It's been climbing and climbing, but it looks like it's kind of reached the peak now here. It's kind of double topped at this point, and now it's sold off frantically. I'm guessing this was earnings. I need to look into it a bit more. And now the 180-day simple moving average, which previously a support, price is starting to kind of wane at the 180-day simple moving average, which is also the channel support. So this is a key area right here. There's a lot going on right here. So if you go down to the daily chart, I also noticed that on the daily chart there was almost like an expanding wedge forming here. So price has been ricocheted up, down, up, down, up, down. And then I used Fibonacci expansion, and I saw that from the peak here to the base at this point, which was where the support line is. If you draw Fibonacci from there to there, it retraced once at the 23.6 level, and I believe that this now is going to sell off. The 180 is above price on the daily and looks like it's curving down, which is also a bearish sign. And if you go even deeper down, wait, let me go down to the 1 hour chart. If you go to the 1 hour chart, what this looks to me like, it looks to me like a bear flag. So price has shot down, made a little ascending channel, but I believe that it's on its way to selling off. So what I'd expect here is, I'll draw some lines. I expect price to either go up one more time and then sell off, or just sell off here. And that will show that it's a bear flag as well. So all in all, I've set an alert on this line here, because once price breaks that line, I believe the sell-off will start, and it will be a frantic sell-off. Maybe not at this level, because I'm just assuming this is earnings. For it to drop this much, it must be earnings, in my opinion. So I believe that a sell-off is imminent for Dollar Tree. Now the question is, where will it sell off to? That's the $1 million question. It could sell off to here, it could sell off to here, it could sell off to here. I don't know yet, but first let's get into a short position. And the great thing about it is that where it is right now, if you short it, you're only risking about 300 pips to make potentially 1,000. So that's like, what's that like? 3 to 1, 4 to 1 risk to reward, which is pretty good. And then last but not least, the MACD and RSI is actually looking good on the daily and the weekly. Oh yeah, on the weekly side, I didn't show you this as well. It looks like there's a converging, a bearish divergence. So MACD and RSI are making lower highs, and that also shows a sign of selling off. So there's a lot of little different things all coming together to make me think that this is going to be a good short play for Dollar Tree. NIO is an interesting one. I'm staying away from NIO because I heard some interesting stuff about them that kind of scared me away from actually making a trade. What happened is that NIO is right now at a key level where, I'll show you, NIO's at a key level where it could either break out to the upside or sell off. Now I'm in two minds, because here this is an ascending wedge, so rule of thumb says that it should sell off, but it's been selling off for so long that I think it's worth a reversal. But I was reading some articles, and I was on YouTube. Actually, let me show you. So I'm on my Twitter right now. If you want to follow me at the Noctrader on Twitter. And I was looking at some what other people were saying about NIO, and I found this. There's an article, obviously it's in Chinese, so I don't really understand it, but someone translated. They said some suppliers require NIO to settle the transaction items on a monthly basis, otherwise it will stop shipping. NIO's cash will be burnt by the end of this year, and new financing is urgently needed. So that is a real cause for concern. It sounds like NIO's suppliers don't trust them, so they want their money every month rather than the typical way people do business, which is like 90 days for invoicing. And that means that it sounds like they're strapped for cash. And I've also heard that they've been pushing their earnings reports back, and normally that's not something companies normally do. And that also sounds like it's a sign of the fact that they're trying to do some damage control and source some finances. So it doesn't sound good for NIO, and I wouldn't want to take a long position when all these things are still in play. It sounds like rumors right now, but this is enough for me to back off. That's why it's important to also look at the fundamentals as well, because that can inform your decision. Just because you see good technicals, you need fundamentals sometimes just to help you make better informed decisions. And last but not least, I'm looking at WKHS. I think we're kind of late to this one. I've been watching this for some time, but I think I just missed the boat. It was a good play. There's no point in me covering this. I kind of missed it. As you can see here, there was a support line, a resistance line here. What am I doing? Not there. There was a resistance line here, and once it broke out, consolidated above it, and then it started climbing again. The last 2 days has been climbing, but I believe that it's got more to go. Once again, I think this play has been missed a little bit, but what can you do? I think there's more to go, but I wouldn't enter it right now just because I want to enter a play when it's just about to be made, not when you're halfway through. So yeah, that's just me. Anyway, it's me, Annie, aka the Noctrader, signing out.